The money market is where transactions in short-term funds take place, used by the participants as a way of borrowing and lending for the short term. What is the history behind the money market? What are the characteristics of money market? Who are the major participants in money market? And what are the advantages and disadvantages of money market? In this video, we will understand the Philippine money market. Let's get started.
What is money market? Money market is an organized exchange market where participants can lend or borrow short-term but high-quality debt securities with average maturities of 1 year or less, meaning it is a market where short-term securities are traded. Also, it is a type of financial market that has an objective to cover the needs or cover the immediate needs of its participants. Of course, the borrower of its short-term securities are those who are in need of short-term funds, while the lender are those who have excess short-term funds. Ever since money market existed, it occupied a major role in the development of our economy. However, the purpose of money market is not just about trading short-term securities or providing investments. Money market has 4 functions. First is financing trade, wherein money market always make funds available to the different units of the economy and finance the urgent needs for short-term funds of the local and international traders. Second, money market helps the central bank in performing its policy-making functions as efficient as needed. Third, money market contributes to the growth and development of the industry by supplying enough funds to every businesses and by assisting the capital formation, particularly in working capital formulation. Lastly, money market helps the commercial bank in achieving its self-sufficiency by providing a market where they can invest their excess reserves and earn interest rate while maintaining liquidity.
So before I proceed in my discussion, I would like to say first that if you want to be a little more conservative with your investment or in terms of your investment, then you must try the money market fund for your money to be secured and safe. Because if you want to deposit or invest your money in a bank, you must try the money market fund. So now let's proceed to the Philippine history of money market fund. So during 1960s, the money market fund was developed or established in the Philippines. And at the same year, the money market in the Philippines history was substantially grown faster in terms of investments and etc. And where the productions expanded also. In the next 10 years, our sophistications has also grown and make the dealers or brokers realize the necessity or the importance for a medium through they could personalize their trade or they could handle or manage their trade properly. And they barred together and decided to form an association, and MART or that associations was organized to sustain the institutional medium and may collectively assist and cooperate with one another by a membership. So now let's proceed to the financial institution. So it's either bank or non-bank institution. It has 64 members that actively trade fixed income securities in the market. Money Market Association in the Philippines was emerged as the responsive in terms of positive changes in their company or in their productions, and also they are dynamic body it is today, and they are pursuing their goals and looking up or preparing for the challenges in the future. Thank you.
Characteristics of money market. The money market and money market securities or instruments have 3 basic characteristics. First is liquidity. Money market instruments are liquid investments, which means that they are readily be bought and sold for stable prices. There are active secondary markets for most money, so they can be easily sold before liquidity. Second is low default risk. The risk of late or non-payment of principal and or interest is generally small. Since cash lent in the money markets must be available for a quick return to the lenders. Money market instruments can generally be issued only by high-quality borrowers with little risk of default. Last is the wholesale market. Money market instruments are generally sold in large denominations. Most money market participants want or need to borrow large amount of cash so that the transaction costs are low relative to the interest paid. The size of this initial transaction prohibits most individual investors from investing directly in money market securities. Rather, individuals generally invest in money market securities indirectly with the help of financial institutions such as money market funds or short-term funds. The Philippine money market has 7 major participants. First is the central bank. The central bank is a key participant in the money market. The central bank controls the supply of reserves available to banks and other depository institutions, primarily through the purchase and sale of treasury bills, either outright in the bill market or temporary basis in the market for repurchase agreements. The central bank can also influence reserves and money market rates through setting necessary reserve ratio, which would restrict the ability of commercial banks to increase the money supply. Second is commercial banks. Banks play 3 important roles in the money market. First, they borrow in the money market to fund their loan portfolios into core funds to satisfy non-interest-bearing reserve requirements. Second important role of banks in the money market is as a dealers in the money market over-the-counter interest rates derivatives. Over-the-counter interest rate derivatives, sub-term for the exchange of cash payment based on subsequent changes in money market interest rates. The third role of banks in the money market is to provide an exchange for fees commitments that help ensure the investors in money market securities will be paid on timely basis. Third is the government. The Philippine government raises funds in the money market by selling short-term obligation called treasury bills. Bills have the largest volume outstanding and the most active secondary market of any money market instruments. These are generally considered to be free of default risk, while other money market instruments have some default risk. Bills typically have the lowest interest rate at the given maturity.
So now let's proceed to the corporation. So the corporations, it is a non-financial or a non-bank financial businesses that raise funds in the money market primarily by issuing the commercial paper. And it is also a short-term, unsecured promissory note. And businesses, enterprises generally are those involved in international trade that also raise funds in the money market through bankers' acceptance. So in a typical banker acceptance, it is a time draft from an importer and then discounted it, and the importer uses the process to pay the exporter. And the bank may hold the acceptance itself or rediscount it in a secondary market. So now let's proceed to the dealers and brokers. So dealers and brokers are the smooth functioning of the money market depends critically on brokers and dealers who play a key role in marketing new issues of money market instruments and in providing secondary markets where outstanding issues can be sold prior to maturity. And the dealer uses the RPs to finance their inventories of securities, while the dealers are also act as intermediaries between other participants in the RP market by making loans to those wishing to borrow in the market and borrowing from those wishing to lend in the market, while brokers match buyers and sellers of money market instruments on a commission basis, and brokers play a major role in linking borrowers and lenders in the federal market and are also active in a number of other markets as intermediaries trade between the dealers. And now let's proceed to the mutual funds and other short-term investment pools. The short-term investment pools are highly specialized group of money market intermediaries that includes money market mutual funds, local government investment pools, and short-term investment funds, every bank trust department. And these intermediaries purchase a large pool of money market instruments, and also they sell shares in this instrument to investors, and in doing so they enable the individuals or other small investors to earn the yields available on money market instruments.
I'm here to report about the Philippine money market.
The Philippine money market has interbanco loan. The interbanco loan, that system that allows banks with excess reserves over the specified position for the day and to lend out an equivalent to other the deficient banks. And the other one is the repurchase agreement. The Bangko Sentral ng Pilipinas, or the BSP, sells the securities to a bank or financial organization that has quasi-banking licenses with a commitment to shop for this bank on a specified date and a specified rate.
Treasury bills. Treasury bills are direct and unconditional obligation of the national government. They are given by the Bureau of Treasury. They carry a maturity of 1 year or less and can be exchanged in the secondary market before maturity. Treasury bills are seen as one of the primest venture instrument in the market. They are safe, liquid, and offer attractive returns to the investors. Unless said day is holiday. Computation of selling price is based on number of days remaining, 182 and 364 days. All maturity dates are traditional and fall on Wednesday. Unit Investment Trust Fund is a pool of money from the public that is invested with the goal of optimizing returns. It is a pooled or managed fund where it gathers funds from investors with similar investments, goals, and trades securities in a way that increases the value for them. In the Philippines, all UTIFs are managed by trust entities, two banks, and regulated by the Bangko Sentral ng Pilipinas or BSP. The way that you invest is by buying of unit of participation. Most UITFs don't charge sales loan.
Here's the features about the money market fund. The money market fund has a initial capital. Initial capital is the minimum investment that is required when you open the fund. It ranges 25 to 1 million pesos. And the other one is the additional investment. The additional investment is the least amount to required when you want to add more to your investment. It can be anywhere from 25 to at least 100,000 depending on the fund. And the other one is the sales load. The sales load is the portion of your investment that goes to the fund. It's charges that is paid every time that you put money in. There are many reasons fund may charges a sales load. One of which is as a compensation to the licensed agent who assisted you. And the other one is the management fee. The management fee goes to pay the operation and management of the fund. It ranges between 0.05% to 1%. And the other one is the holding period. It's the least period of time you are expected to keep your investment in the fund, getting your money back earlier than what you would cause you to be charged for the exit fee. And the last one is the exit fee. The exit fee is assessed when you redeem your investment before the holding period of time.
Now, let's talk about the advantage and disadvantage of money market funds here in the Philippines. One of the benefits of money market funds is that when the investors want to redeem their investment, the companies may offer UITF or the Unit Investment Trust Funds, mutual funds, PERA, or the personal equity and retirement funds or BUL, which are regulated to buy back their investment so that they can get their money back. In addition, they can park their money during downtime in capital market because of the risk of capital loss is minimal, although not entirely absent. They can wait until the money picks up to its momentum again, and when the time that they being parked, they can get to enjoy moderate gains in a low-risk investment. Also, their investments are protected from rate hikes. Money market securities are usually unaffected from rate hikes, so even the returns of bonds falls and the rate is increased, or vice versa, their investments will still unchanged. On the other hand, there are some obvious disadvantages when investing to money market. First is whenever you invest, your money is not insured, unlike LTN-CD, savings account, or time deposit. Second, the returns that they may get are non-guaranteed. They are fluctuated from time to time. The kind of income that the investors get are varied and unpredictable. Another thing to consider is inflation. The inflation described as the rise of prices of goods and services. If the investors' returns do not match or exceed inflation, they might be lose the value of their money over time. Because of the moderate returns, there might be an opportunity cost if they invest in long term. And lastly, the biggest drawback is that the fees might eat into whatever gains that the investors get. Bear in mind that the fees into their accounts, they might be at the losing end. Returns are modest at best. So if the investors take the fees into their accounts,
These are the conclusions based on the informations that we gathered. Number 1. Covers immediate needs for funds. Through lending and borrowing market securities with a short-term maturity that is always available to direct units of the economy, available to any intermediaries, whether direct or indirect. Number 2. Offer safe investments. Lower default risk, minimal effect in the interest rate. However, returns are not so high and only good for conservative investors. Number 3. Liquidity as an important characteristic. Important determinant of inflation. Helps in creation of credit by banks and other institutions. Number 4. Fees and inflations are factors to consider. Inflation and higher fees can negatively affect your not so high return. Number 5. Plays an important role in the economy. Provides investments opportunities, assists capital information, and also assists the growth and development of trade and industry. These are the recommendations based on the conclusion. So number 1. Identify the needs as an investor. Before you become an investor, you should know what is your need. For example, you will invest. Where will you invest? Will you invest in stocks? Or in funds or bonds? It's up to you where will you invest. Number 2. Choose the right money market funds to invest. You should know the right money market funds so that your money is insured or your investment is insured. Number 3. Individual investor should always have a plan B. Because if you don't have a plan B, it will give you a hard time to be a successful investor someday. Because sometimes investments may lead into failure. Lastly, it is key to keep short-term funds in bank or any institution.
I am Marryshell Jadaone from
I'm Chariz Pabilando.
I'm Gliezel Ann from
I'm Luzara.
I am Allyza Basco.
I'm Jhianiese Tracey.
I am Denric, Dagcasin, and we are the Magnificent Seven.